I do think that, look, inflation is indisputably too high. We are using our tools to bring inflation back down to levels of price stability, and we will accomplish that task.
Yes. Welcome back, everybody, to Altcoin Daily. My name's Austin. It is confirmed. Federal Reserve Chairman Jerome Powell, in front of a congressional hearing this morning, has confirmed that he sees rate hikes this month as appropriate, meaning on March 15th, this is happening. Meaning on March 15th, be ready. In today's video, that's exactly what I want to discuss. I'll show you a history of Federal Reserve rate increases and decreases, what this means to you. I'll play you the actual footage of what Jerome Powell said this morning. So, like always, check the timestamps down below, find the news that's best for you. And let's jump in, starting with Federal Reserve Chairman Jerome Powell has told U.S. lawmakers today that the U.S. Central Bank is on track to raise interest rates this month for the first time in 3 years because of high inflation, a tight labor market, and strong economic demand. In a direct quote, "With inflation well above 2% and a strong labor market, we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month." This was delivered in a prepared statement to the House Financial Services Committee this morning. And just to clue everybody in, think of Federal Reserve raising rates as sort of gravity to the market. It sort of brings the mania down. At least that's the intent. Now, Powell didn't specify the size of the rate hike he felt would be appropriate. It's probably going to be 0.25%. That's usually kind of standard. And of course, inflation has gotten out of control. This is all to combat inflation. Here is a direct clip of what Jerome Powell said this morning. Watch this.
Thank you, Mr. Chairman. Good to see you again, and thank you for your testimony today. I appreciate your testimony that overspending has contributed to the inflation crisis we're facing right now, but I also appreciate your humility with respect to the Fed failing to meet its price stability mandate, and the fact that you admit that inflation is primarily a monetary policy phenomenon. So I want to focus on monetary policy in my questioning, and I know you understand that this has human costs. I want to share a couple of anecdotes from my district. A painter, Gerald Holland from Nicholasville, Kentucky, says a gallon of paint costs $10 more today than a year ago. The Suffaletta family from Georgetown, Kentucky, they've been in the retail home furnishing business since the late 1940s. In a conversation last week, they informed me that in the last year, the cost of goods from their manufacturers have increased 30 to 40%, and they're still receiving price increase letters every week. And like most small businesses, their cost of labor and overhead have gone up over 25%. So now they are having to determine how to operate without passing those costs on to the end consumer and still have some profits left at the end of the year. I could share dozens, as many of my colleagues could share dozens of these kinds of stories, including from constituents on fixed incomes who cannot afford the dramatic reduction in their purchasing power. Before November 2021, Chairman Powell, when you declared it was time to retire the word transitory in relation to inflation, my colleagues and I repeatedly, in these hearings last year, after the $2 trillion spending bill, we cautioned you that inflation wasn't transitory, that we were hearing from our constituents, individuals and small businesses, that inflation was hitting them hard and was sticky. But the FOMC kept up with the unconventional monetary policy. And even after you retired the word transitory, as late as February 2022, the Fed was continuing its QE liquidity injections, even though inflation was at a 7.5% 40-year high, and the Fed had rejected an immediately halt to QE at both its December and January policy meetings. This week, economist Mohamed El-Arian published an op-ed in which he states that the Fed's insistence that inflation was transitory is, quote, an error that will likely be remembered as one of its biggest ever. And pardon me for contributing to your humility on that. But my question is, has the FOMC learned from its mistake? Has it learned that unconventional monetary policy at a time when it's not needed is harmful for the economy? Has it learned that QE during a time of recovery is a recipe for inflation? And has it learned that we cannot print our way to prosperity?
Well, I think the main thing we've learned is that the supply side constraints that we saw were not as transitory as we had hoped and thought. And as I mentioned, every other mainstream economists and central banks around the world made the same mistake. That doesn't excuse it, but we thought that these things would be resolved long ago.
Does the FOMC, do you and your colleagues concede now, in hindsight, that the overly accommodated monetary stance for too long was a mistake, a monetary policy mistake?
So I'll just answer for myself. That's for other people to assess. I would say that we had an expectation, and as I said earlier, I thought always thought there was a chance we'd be wrong, and that if we were wrong, we'd be able to pivot. And we did pivot, and we pivoted pretty quickly, but by then the economy really was moving very, very fast.
Well, on the pivot, how quickly do you expect a higher Fed funds rate, removing the accommodation, to bring down inflation, and how does that affect the pace at which you will tighten?
So I expect, as I mentioned, the Fed funds rate to go up in 2 weeks, and I expect a series of rate increases this year, but as I mentioned earlier, given the current situation, we're going to move, carefully. But
my concern is that to break this inflation fever now, you don't have a lot of good options. It's going to take some aggressive tightening in order to break a historically high inflation level. So,
very interesting. Give me your thoughts on this down below. Seriously, I want to hear your take. Comment right now. But let me set the record straight, because many people think that the Federal Reserve is about to quote unquote break the crypto market. They think Jerome Powell is about to crash Bitcoin. Well, let's get some perspective. Let's look at the history of Federal Reserve rate hikes and rate decreases. What has happened historically? And we can see starting in 1955 all the way to where we stand today. Not necessarily the first rate hike, but as we see multiple rate increases in succession over time, it eventually leads to a recession. These gray areas in the chart, that represents recessions in the U.S. economy. So they increase until a recession, then they reset. They increase till we see a recession, then they reset. The most recent time this happened, the so-called cause and effect, was starting in 2005. They continued to raise rates year after year after year until the 2008 housing crisis, when we hit a recession, and then they immediately reset again. What do you think? Please share your thoughts down below. Let me share with you my thoughts on this. I'm not too worried. I think we have a long way to go before a lot of this happens. Number one, a lot of the price right now of Bitcoin is sort of already baked in. They announced this rate hike was going to happen months and months ago. They usually have not always done that in the past, and the market preemptively prepared. We had the correction. Not that the market can't dip lower, it absolutely can. But for this first rate increase, it's sort of already been baked into the price. And number two, of why I'm not worried and why I'm personally still accumulating Bitcoin and ETH, is because the last time we saw a succession of rate hikes, the very last time, was at the very end of 2016 and 3 times in 2017. In fact, here are the exact dates right here. Now you tell me, for those of you who were in the crypto market at the end of 2016 into 2017, what happened to Bitcoin? Well, in this time period, Bitcoin went from about a price of $1,000 all the way up to $20,000. In fact, looking at the full price chart of Bitcoin, we had one rate hike around right here, we had another around right here, and then we had boom, 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 3 rate hikes in 2017 as the crypto market continued to expand. Now, eventually, they hiked it up so much that everything had to correct, everything had to come down, and that's exactly what happened. But that did not happen on the first rate hike. Anyway, that's my analysis. I will be on the lookout for what exactly the Fed ends up doing on the 15th, because again, what they say and what they do could be 2 different things, but I will keep you updated. That is the video. My name's Austin. Like always, see you tomorrow. And hopefully, I see you later this year at Bitcoin 2022, the largest Bitcoin conference in the world. It's in Miami from April 6th through 9th. If you have not yet got your ticket, there's a link down below. And be sure to use code Altcoin Daily for 10% off.